Let's begin with a conversation about the Indian markets. Today, of course, we've seen a recovery. It's a day's recovery, but it is a recovery and a significant one. This has happened after a 4-day losing streak that the markets have been on. So the past few weeks have seen these elevated levels of volatility, investors adopting a sell-on-rise kind of strategy and profit booking. Here and there aside, we've seen the Indian markets overpriced. Many believe this, but the price levels, they seem to be supported by relatively strong underlying growth, which is what another set of market experts are saying. So now investors are closely watching two major global developments. One is, of course, the COVID surge. That's in China, but also the possibility of an end of hostilities between Ukraine and Russia, as remote as it may seem. But there is talk of that. It could provide a significant thrust to the Indian market. In fact, the Russian President Vladimir Putin has once again hinted that he wants that war to end, only to then accuse Ukraine and its Western backers of not coming to the negotiating table. On the other hand, the Ukrainian President Zelensky has tweeted after that phone call with Prime Minister Modi that he's counting on India's participation in ensuring peace in his country. So the question is, what will 2023 bring for both Russia and Ukraine? And of course, in the bargain, how are emerging markets like those of India likely to do if there is a cessation of hostilities? We'll discuss all of this, and our guests are joining us this evening. Anurag, Singh, Mahantesh, Sabarad and Maroof, Raza, they're all joining us this evening to discuss the possibilities. But first, here's a quick wrap of the Indian markets. For that, Anisha is here. Anisha, how did we go home when trade closed on the first trading day of the week after that losing streak of 4 sessions that we've been on, which did rankle a few nerves? Anisha.
Well, yes, it's finally the last week of 2022 and it started on a positive note, at least for the bulls, because the Nifty managed to close just around that 18,000 mark, a 200-point recovery from the lowest point of the trading session. And the good news is that it was a very broad-based recovery. So if you look at most of the sectors, they were trading in the green, barring pharma, which was coming under pressure. And even if you look at the broader markets, the mid-cap index, small-cap index, they were showing solid gains today. In fact, the small-cap index gained as much as almost 4% in the trading session today. And if you look at the advanced decline ratio, very positive, with almost 1,800 stocks advancing to just 200 stocks declining. The Nifty has actually managed to snap the 4-day losing streak and ended in the green. It was IndusInd Bank that was doing the heavy lifting today, and SBI too managed to end with a gain of almost 4%. In fact, talking about SBI and public sector banks, they were the ones that were leading from the front today. A solid 6 percentage point recovery coming in as far as the PSU banking name is concerned, and that was the top sectoral gainer today. Union Bank, IOB were some of the stocks that deserve mention. Autos also managed to snap the 4-session losing streak and gained almost 2% from the highest point of the trading session. It's Nifty Pharma which was coming under pressure, as I pointed out. So third consecutive session of a pain there. Cipla, Device Lab, Lupin, they were all the counters which were trading with a bit of a red tinge. And even if you look at the broader market, a lot of pharma names, the likes of Suven Pharma, despite that deal, Vijaya Diagnostics, they were all coming under pressure. And on the gaining side, it was the new age tech company that was bouncing back. So Ease My Trip was up almost 20%, and Zomato also managed to end the day with a gain of around 8 to 10%.
Thanks, Anisha. That's as far as today's trade is concerned. But let's get in perspective on the course of the markets, the kind that they could take if there is a cessation of hostilities between Russia and Ukraine. Mahantesh Sabarad is joining in. He's an independent market expert, along with Maroof, Raza, consultant and strategic affairs expert, along with Anurag Singh, the managing partner at Ansid Capital. Great to have all of you gentlemen on India Tonight. Anurag, you've expressed doubts about the Indian growth story. Your recent piece in the Economic Times puts a question mark on the possibility of India hitting 8% plus growth again. So what are the headline reasons? Do you think if the war in Ukraine ends, and if that is going to happen, it's a big if, I know, do you think India still won't grow at that rate?
So, Vikram, morning, and very happy New Year to all your listeners and viewers. Vikram, look, I think the piece was largely about the market returns. And subsequently, of course, I will write about why the 8% growth looks fairly difficult to achieve given the global context. But I think let's kind of look at what the market valuation is. And I think that's something which we all should be concerned about, and investors should be a little careful. Look at January 2020 levels, and there was no COVID in Jan 2020, right? It all started in March. So we were reasonably valued by that time. I think from that levels, Vikram, Nifty has given till today 55% returns in 3 years. Nifty mid cap and small caps. Mid cap rose about 82%, small cap about 72%, Nifty Bank 36% and still rising. Nifty IT is 84% despite corrections, right? All of this. Now, this is the 3-year return, right, Vikram? And this is phenomenal. This is kind of like unprecedented. Look at this relative to what the economy has done. Despite all the quarter-on-quarter numbers, and we sometimes, because the base changes, we get lost in the quarterly numbers. The economy from 2020 levels is just about 7.5% up. So it is about 7.5% growth in 3 years, which is barely about 2 to 2.5% every year. And now we are talking that, we're likely to grow at 6%, 6.5%. Vikram, look at the market returns of 50 to 70% on the indices versus what the economy is growing. I think that raises a question, Vikram. Actually, where are we going?
It's a fair question to ask. Mahantesh has been very positive about the India growth story. Mahantesh, what do you say as far as the disparity between economic growth and the growth in the markets is concerned? Is that a worry area for you? Because despite the impact of the pandemic, the Russia-Ukraine war, rising inflation and such, among the global markets and peers, surely India has done well. One of the best in 2022, in fact. Fears around higher interest rates, even the economic slowdown, they haven't held back the good run in the markets. But one part of the analysis is pointing towards high or elevated valuations. How overvalued do you think Indian markets are right now? And what would a possible end in the war mean for our markets, according to you, Mahantesh?
So yes, statistically speaking, when we look at a 3-year period, the base year is what you choose will tell you where you are in terms of your growth rate CAGR, right? So Vikram is right when you choose the 2020 as the base year. But if you go a little backwards and choose the earlier years, then the CAGR growth rate for India is much higher, not 2.5% per annum, right? Given that context, we should also weigh in the fact that we are now fully out of the pandemic. Actually speaking, I'm not talking purely in terms of the medical cases. I'm talking purely from the economic point of view, which means all the engines of the economy are now chugging along. Some are a bit slow, but some are well ahead. We have seen exports grow quite exponentially this year. That was a phenomenal growth that we have seen. We have seen two major sectors shine for the market. If you look at the market now, from moving away from the economy, two major sectors have shown, which is IT and the banking sector. And these are heavyweight sectors. Mind you, you also have within that very large companies, global companies, in fact, within their sphere. So when you talk from an index point of view, many of these global companies, good companies in an indexed, with a high index weight would tend to overrank the Nifty and outperform the Nifty in general. But that's how markets are, right? But we have also seen at the same time a glut of IPOs hitting the market, even during the pandemic period. In this 3-year period, if the statistics states that we have 7.5% growth point to point, we have had 120 odd companies visiting the IPO market. Many of them are very large-sized IPOs, large-sized companies. That brings value to the table for a lot of investors. And I think this entire story of the economy chugging along will rather start picking up pace towards the later part of the next year, if not earlier.
You do mention the IPOs, Mahantesh, but many of these and the large ticket ones, and that includes LIC, which includes like a Paytm, they haven't really found value for their investors. But that's, again, something to watch out for. Maroof, the broader question is how much of a dampener the war in Ukraine will turn out to be for the markets and the global economy if it carries on in the new year. The uncertainties are many. On one hand, you have Putin, who is talking about negotiations to end the war, and on the other, he's pelting Ukraine with missiles. Ukraine will perhaps say, okay, ceasefire is good. Please, Putin, take out all your forces from our territory. That would include Crimea. The question is, will Russia do it? No doubt an end to the war is going to spur the markets. But do you see that happening anytime soon? Because like Shrinjoy, my colleague, pointed out, it's easy to start a war, but very, very tough to end it. Wouldn't you agree?
Yeah, in a way, yes. But, there are a couple of realities of geopolitics. One is big powers love a good war because wars allow them to get into the geostrategic space. wars allow them to make money out of a conflict. For example, I think about 2 months ago, an eminent Indian economic analyst, Mr. Swaminathan Iyer, had written that Putin was making over $180 billion from oil sales despite the sanctions. So we're now looking at about 200 billion plus minus. The second thing is, what does Zelensky get out of it? He's become a superstar. He's getting a lot of money from the US. His latest announcement from the US formally is about $100 billion worth of aid to the Ukrainians. But in reality, the money that wars allow countries like the United States to make contractors, arms sales, rebuilding projects are far about 10 times more, if not at least 5 times more. So the fact is that there's a lot of money involved. What does it imply for us? What implies for us is the fact that we're getting oil in abundance from Russia, but we are also having some constraints on fertilizers that are essential for our agriculture market. We are also having some issues with relation to the grain that, the African countries have to get from Ukraine, which they were dependent on. And because of that, the burden of the global south, which India has decided to lead after G20, will fall on India's shoulders. I don't see the war ending in a hurry. Mr. Putin is a master of escalating and de-escalating, and then again escalating again. So he will keep testing the waters because he, at this point of time, still has something to show to his people that I've taken away a chunk of Ukraine and given Russia a safe border from Ukraine, which was the Russian original requirement of keeping NATO at a distance. Now, yes, he wanted all of Ukraine because he's still talking about the historical reunification of Russia,
That's right.
which means Ukraine was historically,
But very
the old
importantly,
Russian
Maroof, what
state.
you're saying is that you cannot take Putin for his word, and a talk about negotiation, etc., to end the war may not really take place right now. But you did mention about oil. Anurag, inflation has been a huge problem around the world, and a lot of it has to do with oil prices. Those prices have a lot to do with the war in Ukraine. So if that ceases by a quirk of fate even, do you see the inflation scenario easing up? Are we going to see a different world if that actually takes place?
So, Vikram, I think the expert views on the geopolitics, of course, we should all respect Maroof's view on this. I think that view being taken, I would say this war was an event in 2022, but for now, it has now, until it escalates into something bigger, which is unlikely, it has ceased to be an event for the markets, at least in the near run, right? So markets are not really concerned. They understand, got used to the fact that it'll keep chugging along. And I think so market doesn't react so much now to the Ukraine worries. Coming to the oil question, Vikram, look, it's hard to say. And I think I like Maroof's statement when he said, actually, countries start to gain from wars. I think even in some sense, I would say even Russia has come out better off financially after the war, than before. So I think it's so complex. If something good comes out, market will welcome it. But otherwise, I think we should be used to energy wars and higher energy prices in this decade. Vikram, after a long while, the 2001 to 2010 was the decade of energy. And I think for the last 10 years, it did nothing almost, right? And it had a steep fall. But I think this decade is going to be back where the commodities and energy will be kind of back in favor. Because, of course, there is a limited supply in the world of these commodities, and I think there will be a scrambling for it. So that's the larger belief, Vikram, that we have. So I think we should always be fearful of some risk to the inflation from energy wars on the upside. On the downside, I think it's pretty much settled now. I don't think it will go below this point. But the larger inflation problem will not settle down because what the central banks throughout the world are trying to do are they're trying to address the core inflation, which excludes food and energy.
Right.
Vikram.
Right. Fair enough. Mahantesh, we are talking about the upside and the downside risks over here because of the Russia-Ukraine war. It has affected the course of the Indian markets, no doubt. How exactly do you think it's played out? And how are the looming uncertainties about the war, how are those likely to play out going ahead for our markets?
So let's look at two numbers, the macro numbers as far as India is concerned. One is the oil price that we purchase our oil overall from the world. If I'm right, and let me compare it with what was the case just prior to the war, right? We are almost at nearly the same situation. There's a small inflation. We went through a cycle of a super inflation in oil prices, which has now marginally come down to this almost same levels of pre-war situation. Let's look at the second macro number, which is inflation, which is limited to India. India's inflation has also peaked, had its run, and has now started easing out. In fact, the confidence of the inflation coming down further down is furthermore bolstered by the fact that the rate hikes have now come into place. There is only limited space now available for rate hikes to happen. But at the same time, there is also a damaging effect of both these things that has really constrained our economy. And that damaging effect is that our industrial sector or manufacturing sector has been a little slow in terms of taking off as yet. We may have certain subsections of the industry growing well. You mentioned defense in your opening remarks, for example, right?
True,
India
yes.
has done quite well in defense,
Yes.
but not necessarily any other manufacturing space. Take automobile, for example. It's still in doldrums, right?
Yes, it is.
Much of the problems have to do with demand than really the chip issue that we used to talk about.
Correct.
So what I'm trying to say is that much of the macro events that concern India are now out of the way. Only certain effects still remain, and I believe that, like I said earlier, we would be able to recover much faster if everything stabilizes. When I say all the macro factors stabilize, oil
Yes.
stabilizes.
But at any
inflation
point in time,
stabilizes.
like Anurag mentioned, Mahantesh, there will be a risk that the markets will face. Right now, the uncertainties are around COVID and they are around the possibility of a war continuing or not. And those uncertainties the markets are dealing with, and some of those risks work out for certain markets like India as well, like we've been discussing. How it's going to pan out in 2023 is the outlook that I'm discussing with you. We've seen credit growth, which has been great in India, like we've been saying in the past. Industrial production, industrial investments haven't really kept at par, like you yourself, Mahantesh, are pointing out. So if the war uncertainty gives way, I wonder how the banks are going to perform, how the bank Nifty higher run that we've seen, if that's going to continue or not. But all of that is for the future. Thanks very much for joining us with your inputs, Maroof, Anurag, and Mahantesh. Always a pleasure getting your perspective on all things connected with the markets and geopolitics. Thanks very much for joining us on India Tonight.